Hello again, and we are back with a video about how to screen stocks and in general about the market information that we get from different sources. So in the last video, in the video number four, I have talked about the tools, the various tools that we can use and a basic framework for finding good trades that are useful. So in this video, I'm going to expand on that, showing you some examples, some very simple case for figuring out what are we talking about, right? So for that, I want to take you to a very commonly used platform for scanning, not scanning. So let me click here. It's a screener. This is a TradingView platform, which is freely available. You don't have to subscribe. It's probably one of the most advanced free screening platform that's available. They do have an account. They do have a paid account where you get extra things. You can get scanners, but it's on and off. So I have not really checked. I've not used it for a long period of time, but I like to show it. I'm not showing my go-to softwares apps because I don't think that'll give you any view, because if you have to pay, that's not a good place to start. So if you click on the screeners on the TradingView platform, you see the screeners and different things. We want to screen stocks. So I just click here, we go here, it opens up a nice screen list of companies. So these are the companies that are the biggest companies in terms of market cap, right? Market capitalization. So these are the biggest companies. Microsoft has overtaken Apple in the last week or so, owing to Apple's supply side issues. One of the major issues in the last few months has been chips. There's enough potatoes, but not enough chips, right? That's the issue. So there seems to be a lot of companies that have come up in that process. NVIDIA that you see here it never belonged to the top 10 largest companies, but because of the surging demand for chips, you find a lot of other companies also, similar companies. Intel has done, AMD is up as well. So we can look at, these are the biggest companies in the world, and you can go and you can find a lot of these companies that are making the chips. So you would expect the chips are down, but chips are up, it seems, right? Intel has come up. These companies usually don't exist. Qualcomm, right? So this is the column that you have right next to the company is the price, the recent price. In this case, it's the last trading price when the market closed last night or yesterday in US, right? That's the price, and the percentage change is showing you how much it has changed. The change is being from a previous day if you compare, right? So Thursday prices, but as compared to the Wednesday close prices, right? So it's gone up, and we want to click here to see what really we care about as a day trader, and you'll find right here, there are companies, a number of companies that have gone up almost 100% to 40%. And like I said to you last video, I personally like stocks that go up 10%, right? 10% up on a day by day on day basis. And you find plenty of those companies, right? And this is not just yesterday. This happens almost every day. And as a day trader, if we hit any of these stocks at the time just before they are about to go up, then we have a winner, right? And this is all about that. Day trading is all about that. It's not gamble. I want to reiterate, it is based on a lot of analytical factors, understanding the psychology of the market, understanding the demand supply mechanism that I talked about last time. What you'll notice here, that these companies that have gone up tremendously, to quote, to borrow a word from ex-president of US, tremendously, 90%, and all of those companies, you find these are companies you would not know. And I'll tell you, to be honest, most of the time, the bets that I'm making every day. I only know probably 10 to 15% of those companies, which means 80 to 85% of those companies I've never heard of them before. And so it's not about the fundamental strength of these companies. So I mean, I'm going to come to it. Change here, the third column, change, or fourth column actually, the name, the price, the change in percentage terms, and the change in absolute dollar terms. What you notice here is, I mean, it's exactly the same thing. One thing is the price of these stocks. And I've said this earlier, I'm interested in stocks that are not priced too high. So typically I like anything that is below $10, but I'm willing to go to $20 if it's a good deal, right? If I see the connection, if I see the jump that's going to make. There are 2-3 reasons. One is the cheaper the price is, it's more accessible to regular investors like you and I, retail investors, who are more likely to invest in these stocks, which are cheap, because for big guys, it makes no sense for them to invest in a cheap stock, right? Because the upside, even if it goes 100%, the overall gain for them is not interesting. And the reason for that is, I'll show you here. For instance, this ADTX, if you look at the market cap, is less than $70 million. It's not interesting. Even the PETB, it is only $32 million. It's not, these are peanuts money. So the big guys won't be interested. And that's where we have a niche anytime we can find. But I'm not telling you to go after companies that are super, super tiny. They can be bigger, but we want to ensure. So one thing, you remember, there are two sides. One was a demand thing. So we want a stock in high demand, and that will result into this column of change, percentage change. These stocks were in high demand yesterday, early trade, and that's why it has gone up. And now if you want to trade on these, it's too late. So this information is not useful to us, right? It doesn't tell us anything about what's going to happen tomorrow. And that's the thing we are interested in. So this is only to show you what day trading can do. If you figure these out, if you have realized which of these stocks are going to go up tomorrow, if you figure that out early in advance, you are bound to make a lot of money, understandably, right? That's not, but the question is how to do it, right? So the fifth column here is about ratings. So ratings are coming from analysts, and not all analysts. There are analysts that analyze companies, individual companies. There are analysts who analyze industries. There are analysts who analyze countries even. So what this rating shows here is what is called consensus estimate. Consensus estimate of the top rated analyst. Yes, you heard it right. There is a league table of analysts which is dependent on their past performance, right? So those analysts who hit the bullseye in terms of their predictions, they appear more high. So here they are predicting. So analysts are typically trying to predict the future profitability of the companies in the next quarter or next year, right? Based on a lot of different factors. We don't want to go into details of what are the deciding factors for an analyst to come up with that's a part of a different course. I hope I'll be able to upload at some point. So the strong buy, when it says, actually this is a column that we don't have to really worry too much, but it is one of the things to cross-check also. If you find something is strong buy, and everything else looks fine, that's a good place to start. Sometimes you find really, really compelling reasons from the indicators for you to buy, but then you find strong sell. You have to cross-check why analysts are all in unison saying that you should not buy that stock. All that looks fair, right? Fine. So it's not such an important thing. Volume is the total size of trade that's happened in the yesterday, right? So this is the number of stocks that changed hands. That's the volume, right? So 35 million stocks for the company that has moved up the most. This is instructive. This is helpful. because we also want to ensure that the company's total stocks available in the market should not be too high, right? So volume doesn't give us that. We have to cross check. This is the supply part of the market capitalization. I've already told you. So if we click here, we get the largest companies, but as I would say, they are not interesting. But there is something very interesting happened yesterday, and I'm glad I can show that to you. So it's a nice time to actually record this video. You've got this company, NVIDIA, which is a semiconductor company. They have gone up 12%. Now, this is quite remarkable. Doesn't happen. The big companies, they don't move up and down so much. It doesn't happen, really. It's a very rare phenomena. And that's because of the crunch that you see, overall crunch in the market. NVIDIA is up, and there are a few other companies that you'll find in the double digit. Double digit is exceptional because for a bigger company like this to go, and that's why they are the 7th largest company. They become 7th largest company in the world. NVIDIA never figured. I've been investing in NVIDIA, and I've been holding long-term investment, not day trading, for 7 years, 6 or 7 years. 2015, I think, 15-ish, yes, 14, 15, 6 years. And I've never seen them figure in the top 50 companies. But because of the crunch that's one thing. The other characteristics, if we just want to go in terms of the sectors. Now, other thing that you want to look at the sectors, right? Sorry. So if we click here, you'll find there are certain things that will appear, or maybe not. Let's just stick with the largest companies in terms of market cap. Let's first, again, go. One thing you'll notice is obviously Tesla has come up quite remarkably, but big companies typically move 1 to 2% is the max. You know, you'll find they go up 2 to 3%, 3% on an extremely good day. Like Adobe is looking almost touching 3%, right? But most of it is going to be, I mean, this is on expected lines, going up, going down, even with the worst possible reason. Some of the things you will notice here, like the retail sector has picked up in one day. This is one day's trend. And the other trend I would say is in auto sector. So Tesla is probably one part of it, but let's try to find other companies in that sector. So delivery and chips are given the companies in the semiconductor sector. They have gone up, but you will find that I think General Motors should be up, and everything else in that segment should be up by quite a margin, right? 3-4%. I think the auto sector is doing well because they came out with their earnings report and they have beaten, right? So you can see 5%, General Motor hitting 5%, which is almost 5%, which is quite remarkable. And the reason being they have done really well in terms of sales, because there is a rebound in the market. Demand for people are now buying. People have saved money, they've not used it. All that demand is coming, and which means the supply shortages on the semiconductor part is not yet hit them. It's going to hit them in the coming quarter. So it's not a stock that you want to hold clearly, but you know, these trends you see across the sectors, right? So most of the automotive companies, you would find they have done well in this one day. We're only talking about one day, right? So you see that we are interested in the short attention span of the investors. We are not looking for the long term, what the market have done. So that's there. Then you've got this column PE. PE ratio is price to earning ratio. Price is right here. The last, what says, this is the last closing price divided by the earnings, which means the profit, the net profit of the company. You don't need to know accounting, but this is basically what it means is, I want to go up. Let's go to the biggest companies. Let's go again and let's see the PE ratios. So PE ratio for Microsoft, the biggest companies on planet, is 37. What it means, the $336 it takes to buy one stock, you divide that by the net profit, and what it says is for each of the stock that you buy, the company is earning you $37 for that stock, right? So, which sounds quite impressive. And if you were to go back the change, if you look at the fastest gainers, what you will notice is they don't have PE ratio. It doesn't exist. So that's one thing. I mean, so what it means is accounting numbers are out of your equation to begin with. You are not focusing on the fundamentals of the company. I said that in the first class, and I'm repeating it. Fundamentals are good to confirm, cross-check if you're putting your real hard-earned money. But while you're practicing, you can take it slowly, you can learn it slowly, but it doesn't really matter. So PE ratios, they don't exist. And the reason is there is price, but there is no earnings, which means there is no positive earning. These companies are either not earning anything, they don't have any profit, or they are losing money. So look at the top company, right, which has gone up 95%, EVEX. If you look at EVEX, there's no PE ratio, but PE ratio is price divided by, prices here, divided by EPS, which is called earnings per share, which means profits per share. What this, if you want to analyze it, if you were to buy EVEX stock for 12.68 US dollars, the company is losing for each stock $1.5, right? So they are losing money. Now that could raise concern, but the question you have to ask also, you have to probably look at when did this company came up, when this company was founded, and you will realize a lot of these tiny companies, company with the market cap of $100 million, tiny company by any stretch of imagination, but they have been around for a while. They only have 35 employees. It's a tiny company, and they are in that, probably they are in that initial startup stage, or they are about to enter into a growth phase, right? So we shouldn't be reading too much into the profitability of the company. Yes, profitability is completely out of the picture if we want to do day trading, right? So that's something, knowing which sector, I said it in the last class, also at the end of the last video, sorry, about the sectors where you typically find these big jumpers or big hitters, and you can see the health technology is there. So a lot of these companies that get approval from FDA or some other, they have successful trials, they have good results that came out of successive trials, all that results into the companies. So tech and health is probably going to be dominating all this sector, the biggest gainers, so to say. Now, so this is the usual things that you will look for. I mentioned about the screening, so we'll try to add a few filters, and I think this video has become too long. I'm going to record another video and where I'm going to add some columns to this screener, and we'll try to find what seems to be the stock for tomorrow. I'm going to show that in the next video. Stay tuned, and I'm going to see you in the next video.